RateGain's Q3 FY26 results signal a fundamental shift in market dominance. Today, we're looking at the definitive numbers reshaping global travel tech following the massive Sojern integration. We start with a striking contrast: record-breaking revenue colliding with a severe drop in reported profit. Operating revenue skyrocketed 93.8% year-over-year to 540.03 crore, yet reported PAT fell 53.2% to 26.45 crore. How does a company nearly double revenue while cutting profits in half? The answer is the Sojern acquisition, which establishes a new global standard for travel technology. This is the first full consolidation of the deal, and while the One RateGain playbook is building a category leader, M&A accounting is temporarily masking the core business momentum. One-time acquisition costs are hiding the real story. If we take the reported PAT of 26.45 crore and add back 34.62 crore in exceptional expenses plus 23.08 crore in M&A amortization, the normalized PAT is actually 61.07 crore. That's an 8% year-over-year growth in adjusted profit. Core operations are scaling massively. Revenue is up nearly 94% and EBITDA grew 41.7% to 87.12 crore. EBITDA margins dipped to 16.1% as the company absorbs the lower margin Sojern business and invests heavily in global growth. Operating cash flow reveals a much healthier business than the bottom line suggests. At 151.74 crore, cash generation is nearly 6 times higher than the reported net profit, proving high liquidity and strong operational health beneath the accounting adjustments. Management is proactively shrinking the new acquisition debt. They've already wiped out 20.2% of that debt using organic cash, prepaying $25.25 million in total. While they move to a net debt position, the net worth has strengthened to over 1,859 crore. MarTech now dominates the mix at 62.6%, growing a massive 76.4% year-over-year. DAAS accounts for 24.4%, featuring new wins like Tiger Air Taiwan, while the distribution segment is currently being modernized through AI-first solutions. Artificial intelligence is the engine here, with the AI Core Hub driving explosive ancillary revenue for clients. Rapidly deploying tools like the AI Concierge and Uno Viva voice agents is driving up to a 300% increase in revenue for select partners. Efficiency metrics remain top tier. Revenue per employee hit 2.13 crore, up 60%, successfully absorbing a 43% surge in headcount. With a gross revenue retention of 94.6% and an LTV to CAC ratio of 13.4x, this is highly sticky, profitable revenue. The combined platform now commands massive scale, powering over 13,000 travel brands globally. This puts RateGain in a prime position as global online travel bookings are projected to cross $1 trillion in 2025. Of course, integration accelerates risks. Investors should monitor integration friction from the headcount increase, the discipline required to maintain debt repayment, and the company's exposure to global macro shifts in travel demand. The final scorecard is clear. Cash generation significantly outpaces reported profit, confirming high earnings quality. While one-off costs and a labor code true-up hit the bottom line, the focus now is whether M&A synergies restore margins to the 20% range by FY27. If you found this earnings deep dive helpful, don't forget to like, save, and share this video. Follow and subscribe to ZinvestZ for more smart investing insights. Thanks for tuning in.